Hey traders, Raghee here, and in this free video we're going to talk about this Wednesday's FOMC decision on rates and the implications across a few of my favorite markets. And when we talk about the Fed and the decision for this Wednesday, I think it's very interesting that when you take a look at this column right here, which has grown significantly by about 14%, since last week, where there are more traders anticipating possibly no cut from the FOMC. Now, remember, this is still the minority. This is still a minority. This is still the majority right here. But this has fallen from I think, a peak around 90%. Right here, a week ago, 94.6% right here. You can see how much it's fallen to where we are right now. So there is a growing minority of people thinking the Fed may not do anything. Now, for those of you that ask, Rog, what do you think the Fed's going to do? Yeah, gang, we're probably going to get that 25 basis point cut on Wednesday. But then October and November become huge question marks. You know, are we going to see anything in October? Right now, you can see very non-committal. Are we going to see anything for December? So what we're going to see, the dominoes falling from their Fed rate statement and the subsequent press conference on Wednesday, is going to determine how the Fed fund futures contracts are going to affect the target rate probabilities for the October 30th and the December 11th meeting. And there's a pretty good chance the Fed may not want to cut as actively as some traders would like, as some investors would like, or that we're going to have to wait and see on each and every one of these meetings, right up into the meeting. What is the data like? What is the environment like? If the Fed wants to message a wait and see, hold type, we're not going to give you a rate cut message, it's going to be this Wednesday, and it's going to be concerning October's meeting. So where does that leave the dollar? I am not bearish the dollar. The dollar does not need the Fed to hold to see strength, not one bit. In fact, we have a current open trade in the euro, and this can be either through the FXE ETF, puts on the FXE ETF, the 6E futures, or the euro versus the US dollar Forex. I mean, three different ways to play this, but they're all emanating from this currency discussion of how can we be long dollars. This is one of my favorite places to be long dollars versus the euro. And the other place is to be long dollars versus the Aussie. So we have now since July right here, taken a number of euro shorts. And this is about as compliant the euro has been, because preceding the July trades, we had a lot more difficulty shorting euro. I mean, make no mistake about it, we've continued to short it, but it's been much more cooperative since July. All right, so what else? Where else are we looking for implications? I think the gold market is going to continue higher, not only because of the Fed decision, but also because of the uncertainty in Saudi Arabia regarding Saudis, Iran, and the U.S. We'll talk more about that in the premium video. And then I think the one place that a lot of traders are curious about, and I think the one place that has already responded to the lower expectation for more dovishness throughout 2019, is the 30-year bond. And this is actually an oversold zone right now. This is an oversold buy zone. And I do anticipate bonds to bounce. I don't know that we'll quite organize into the great uptrend that we had been in, but I still have a very bullish bias on the 30-year bond. So these are just three of the markets that I'm looking at going into Wednesday's meeting. Emphasis on the US dollar in this particular free video. We'll keep dialing into some of these setups before Wednesday, 2 p.m. But keep an eye on that euro. That's been a great trade for us since July. And I'll see you in the next update.